Okay. Okay, this is first time we are doing a live. I have no idea how this thing works. I don't know how to blur this background. Okay, how do I edit? No, nothing works like that. So, so we are gonna look at let's say Nifty. Let's start with that. So I think if my screen is visible, okay, I hope it is. I'm looking at Nifty now. Let's start with daily. A lot of things have stayed the same. Nothing has changed much. But there is one important thing that has happened. I'll zoom in a little. All the fall that we have seen from here, when we see, we could see it or we had measured it. This is what the count we thought it was. So this was WXY. Now, Y has also, you can sort of put it into three counts here. Let's say this is A, this is B, and now this is an elongated C. Is not stopping at all. Something happened in the last week that felt like this is a reversal, but let's hold on. Let's understand what it is. I'll zoom one more level down, 75 minutes. Now, the Thursday opening candle, it started from here. It was a big gap down, and also it went on to hit the maybe a few hundred points down. Now, when I put a retracement from 3 to 4, I can see that it has touched 127. So, this point, even uh, even at this point in time, at this particular candle, it is just continuing on the downtrend that it has carried forward. Now, when I put it just to have uh, the standard trend line that we would draw, it's a 2 to 4 trend line, and this is our maturity trend line. Only after this particular trend line is broken in this direction, probably then we might conclude this as a trend reversal. Now, you may think of the signs that the indices are giving. Let's say if you look at the saturation, it's already like 200. It's fallen below 200%. It could very well touch 261 percentage as well. So that's a extension from WX to Y. So we are targeting Y here. Now, there is no limit. There is no, obviously, 261, it's already an elongated C, elongated as in it's covered a lot more ground than the usual levels. We could still see some kind of fall, some fall that could touch this 261 percentage as well. However, when I switch to 75%, I think we still have I mean, we got this gap filled on the same day, but we still have a little few hundred more points to cover till the trend line breaks. And if this breaks and if we get a closing above that, probably is when we would start considering it as a trend reversal. Now here, if you see, this is a bullish pattern, bullish reversal candlestick pattern at the fib level, at an important fib level. So there is a good chance that it can go up. However, we will not conclude anything on certain things till this particular trend line is broken. Now this was Nifty. Let's look at maybe Bank Nifty. I'll just remove all the drawings that I had earlier. Bank Nifty also has a similar story. I have not put markings, but it's just the same. Again, a bullish candlestick pattern here. So let's say if I put a retracement from this point to this has also crossed 127. This also has a similar reversal pattern formed here. And if I put a trend line to same in the same way that we have put it for Nifty, probably this is also currently at the same point. It needs to cross this trend line, then probably we could conclude on something. So at this point in time, How do I stop sharing? Stop sharing. So at this point in time, it's slightly unclear. It could be like one day of an indication of market reversing in a little sense, but still, it's been a long downward fall that every index has undergone, even the markets as well. And we still need a good confirmation before we actually decide that the trend is going to reverse. With the events that are happening every day, with the war or with whatever that that, that hinders the movement of crude oil and other things. So that is something also impacting a lot. Lot of volatility is killing the whole aspect of it. So let's look at the India VIX as well. Okay, I'll share my screen once again. Even at India VIX, if I look at, this has been the highest volatility for after a very long time. So we are reaching volatility index at around 25, and this is obviously annual volatility. And we have a but then you have a word, just have a comparison. The last time it went around 27, 28 was somewhere in June 24. It's been about 1.5 years, or maybe about 2 years that it has gone. It had gone 30 or above 30 probably when the Ukraine war broke out. And obviously, the earlier highest volatility point that we saw was during the COVID. So if I just simply, I'll just switch it to the higher time frame here. We are at almost like a peak volatility. We may see some kind of relief in the markets, but currently we are at the peak volatility. We may see a reversal and we may actually possible, but not a market where we would go aggressive with certain positions if we are trying to take positions into the F&O sector or something. Again, volatility trading, sort of shorting the markets and all, again, slightly risky. But if you have like a very good hedging mechanism in place or some kind of stop loss you could put, probably that's what you should rely more on than obviously it's not the market where we would take a naked call or a put position. So we are facing all these things. We are actually, in fact, uh, looking at peak volatility in the recent times, and the indices could be little shaky. Now, a lot more things could happen. I think whenever the war updates have, I mean, we move on into some kind of conclusion with the US and Iran war, that may happen, that may not happen. That uncertainty is always there, and with the events that folding up and that are folding up in the Middle East, uh, we are not very sure what could work out initially. So probably I'll be watchful tomorrow. Let's see how the first morning session goes in the on the Monday morning, and probably that's when we might get some hint. Probably a short-term positions or an intraday position could be thought of with respect to what we see in the early sessions in the market. So currently, again, time to be watchful, time not to get very aggressive in the markets, and probably over the period of time, we will get a chance to enter and we'll get a chance to take a more comfortable, less volatile trade kind of things. So this was about it today. We are with a couple of things probably we could use this opportunity to announce. We are coming up with our first online version of the course. So we have been running our Elliott Wave course for about 1.5 years now, almost 2 years. This is batch 9 that is going on, but that's the other mode of uh, taking tuitions, and I won't say tuitions, let's say other online sessions that are happening currently. But we are getting live onto the platform very soon, some kind of course platform that we would choose to get our content on it. So more about that, I'll probably keep on updating on this feed as well. So that is coming up. We are coming up with our next batch from 26th of April. That's a Sunday batch again. Sunday mornings will have these sessions. So again, if anybody is looking for, or if that excites you, probably you can consider getting onboarded with this thing. So that's it for now. I think let's watch tomorrow what happens, and let's see if the market gets us any opportunities in the coming week. Thank you so much.